All right, everyone, welcome back. We're diving into some seriously fascinating stuff today.
Yeah, definitely
We're
fascinating.
talking crypto, but not just like, Bitcoin's price or whatever.
Right. We're way past that.
This is about how the whole world is figuring out this crypto thing.
Exactly. How governments are setting rules and how people are actually using crypto in their lives.
And get this, we're focusing on three totally different places.
Huge players, though.
Mm.
India,
Europe.
the Middle East, specifically the GCC countries, all as of right now, 2025.
We've been poring over some really interesting reports, analyses.
Even just watching the market trends, seeing what people are doing.
It's like things are changing so fast, we want to give you the shortcut.
Yeah, cut through all the noise and just get to what really matters.
So buckle up. Let's start with India. They've been making some major moves. What have you found?
Well, late 2024 was huge.
Okay, why? What happened?
India unveiled this whole new comprehensive regulatory framework for crypto.
So before it was kind of, I don't know,
A bit of a gray area, yeah. This new framework, though, brought some serious clarity.
which people probably needed. So there's this new, what was it called?
The Digital Asset Regulatory Authority of India.
Right, that. It sounds powerful.
Oh, it is. It's independent, has a ton of power. Its whole purpose is to oversee India's entire crypto world.
So like everything.
Pretty much.
Yeah.
Issuing licenses to exchanges, the
Yeah.
companies providing crypto services.
Setting standards for the industry, right? I bet education is part of it too.
Oh, definitely. Making sure people understand blockchain, the whole 9 yards. It's about making the market legit.
That makes sense. So with these new rules, what are crypto companies actually having to do? What are the specifics?
Well, for starters, the licensing requirements are crystal clear now, much more transparent than before.
Okay, good. Transparency is always good.
And there are capital requirements now, serious ones. Plus, strong cybersecurity protocols, got to keep things safe.
Yeah, of course. What about knowing who your customers are? KYC. Right.
Exactly. KYC is a big part of it, verifying everyone's identity. Now, initially, some in the industry were a little worried.
Oh, I bet. More hoops to jump through.
Yeah, compliance can be a lot. But now, most folks seem to agree these regulations are actually crucial.
How so?
They're building trust, long-term stability in the market. Yeah, that's the foundation for real growth.
Makes sense. Now, the big question everyone always has, taxes. How is India taxing crypto?
It's pretty interesting, actually. They've got this tiered system for capital gains.
Tiered, like different levels.
Exactly. Lower tax rates if you hold your crypto for longer.
So they're encouraging people to invest, not just like flip it quickly.
Exactly. Long-term vision. Then they added a transaction tax on high-frequency trading.
So if you're doing a ton of trades, you're going to pay more.
You got it. It's all about curbing the crazy speculation without, hindering legitimate trading.
Smart. So with all these changes, where does India stand globally on the crypto regulation front?
Honestly, they're seen as a leader now. A lot of other countries are looking at India's framework as a potential model.
Wow, that's a big deal.
Yeah, the way they balanced regulation with encouraging innovation, it's getting noticed.
Okay, so those are the rules. But rules are one thing. What about actual people? Are Indians actually using crypto more now?
It's been pretty remarkable, honestly. We're seeing a surge in crypto ownership and usage across the board in India.
Surge is the right word, huh? Like, how big are we talking?
Well, get this. By 2025, nearly 30% of adults in India owned or had used crypto.
Whoa, 30%? That's a huge jump from just a couple years ago.
Huge. In 2022, it was only 7%. So yeah, things are moving fast.
What's driving that? Why are so many more people getting into crypto in India?
It's a few things, really. Like we talked about, the regulatory clarity is a big one.
Makes sense. People want to know the rules of the game.
Right. Plus, India's tech infrastructure has gotten a lot better. Easier to access and use crypto now.
Right. And I bet there's also just a growing awareness of how crypto can help solve some of India's financial challenges.
Absolutely. People are starting to see the potential, especially in a country with such a large unbanked population.
Are any big Indian companies embracing crypto?
Oh yeah. For example, Flipkart now accepts Bitcoin and Ethereum for certain high-value purchases.
Wow, Flipkart, that's huge.
Right. And Reliance Industries, they launched their own blockchain-based loyalty program with its own token.
So not just using existing crypto, they're making their own.
Exactly. When big companies like that make moves, it makes crypto seem more legit to everyday people.
Absolutely. What about smaller businesses? Are they getting in on the action too?
Yeah, we're seeing a ton of innovation from small and medium businesses. They're figuring out how blockchain can benefit them.
So that's not just the big guys. What about the average person in India? What kinds of crypto services are they using?
Mobile-first platforms are really popular, especially in areas where traditional banking is hard to come by.
Makes sense. Mobile is king in India.
Absolutely. Apps like Crypto Rupee and Block Parat are making it super easy for people to get into crypto.
User-friendly, I imagine.
Yeah, even if you're not super tech savvy, you can invest, save, transact with digital assets pretty easily.
That's key. Anything else making it simpler for people to get started?
The integration of UPI with crypto exchanges has been huge.
UPI, that's the mobile payment system, right?
Exactly. Now you can buy crypto as easily as you'd pay for, I don't know, groceries online.
That's a game changer for sure. So who's driving all this adoption? Is it just tech-savvy folks?
It's much broader now. You've got a lot of young people in India, very digitally native. They see crypto as a way to build wealth.
Yeah, in a way that traditional investments maybe haven't offered them.
Right. Plus, India has a huge diaspora. They're using crypto for remittances, sending money back home.
Way cheaper and faster than traditional methods, I bet.
Much. So it's a practical use case, not just theoretical. What's interesting, too, is the government's stance.
Okay, so they've set the rules, but what's their overall attitude towards crypto now?
Seems to be much more open, especially since the regulations are in place. It's fostered more confidence from big investors.
So they're not scared of crypto anymore.
Not really, no. They see the potential, but they want it done right within the framework.
That's fair. Any challenges still? I feel like there always are with something this new.
Oh, definitely. Volatility is still a concern. Security risks,
Mm.
potential scams, especially for older generations who might not be as familiar.
Yeah, education is still key, I imagine.
Hugely. Helping people understand blockchain, how to be safe, that's crucial.
Now let's talk digital rupee, India's own digital currency, right?
Yep, the central bank digital currency, CBDC. It's been a really significant journey.
Has it actually launched?
Oh yeah, by 2025, full nationwide rollout.
Wow, that's a big step. How's it going? Are people using it?
It's been phased, but millions of users and merchants already. Seems to be pretty well received.
Why that?
The Reserve Bank of India, RBI, has been really careful building a framework focused on reliability and security.
So people trust it because it's backed by the government.
Basically, yeah. But the big question is, what's its purpose?
Is it going to replace cash? Our phones already do so much.
Well, right now, the idea is to enhance the existing financial system, not replace it.
Okay, so it works alongside what we have.
Exactly. It's about offering benefits, seamless transactions, lower costs, more efficiency.
Makes sense. So how is the digital rupee different from like Bitcoin or other cryptocurrencies?
Stability is the key. The
Mhm.
digital rupee is backed by the RBI, so its value is much more stable.
As opposed to Bitcoin, which can go up and down like crazy.
Exactly. So for everyday transactions, the digital rupee offers more certainty.
Is it just for India or are they thinking bigger?
They're already running cross-border pilots with other Asian countries,
Interesting. What's the goal there?
streamlining international payments, remittances, even trade settlements.
Wow. So it could have a real impact beyond India's borders.
Definitely. But the RBI is also keeping a close eye on how it affects things domestically.
Like what?
The impact on commercial banks, on credit creation. It's a balancing act.
Finding that sweet spot between innovation and keeping the whole system stable.
That's it.
All right, so India's doing their thing. Let's hop over to Europe. What's the big story there in 2025?
MiCA. That's all anyone's talking about.
Like,
Markets and crypto assets, their big regulation. By 2025, it's been in full effect for over a year.
yeah, how's it going?
Brought a lot of clarity, I'll tell you that. Uniformity across the EU, which is no small feat.
Yeah, Europe has a lot of different countries, different ways of doing things.
Exactly. But MiCA sets clear rules for everyone. Crypto service providers, issuers, traders, the whole ecosystem.
So it's not just about protecting consumers.
It's about making the whole market safer, more transparent, building trust for everyone involved.
That's a good thing. Who's making sure everyone follows these rules?
ESMA, the European Securities and Markets Authority, they're the watchdog, working with each country's regulators.
So everyone's on the same page.
In theory, yes. But in practice, there are some differences in how strictly each country applies MiCA.
Ah, so there's the law, and then there's how it plays out on the ground.
That's it. Some countries, like Germany and France, they're really proactive, even adding extra incentives to attract crypto businesses.
Okay, so they see it as an opportunity.
Yeah. Others, like the Netherlands or Sweden, they're a bit more cautious.
So different interpretations, different speeds.
Exactly. It's that constant balancing act again, fostering innovation while protecting people.
What do the actual crypto companies in Europe think about MiCA?
Overall, pretty positive. It's removed a lot of uncertainty, which is what businesses hate.
Right. Clear rules make it easier to operate.
Exactly. But there are some concerns, especially from smaller startups and those involved in DeFi.
DeFi, that's decentralized finance, right?
Yep, basically financial services built on blockchain, no middlemen.
Got it. So what are their concerns?
Compliance can be costly and complex, especially for smaller players. They worry about being stifled.
That's fair. Is MiCA set in stone, or are they thinking of tweaking it?
Oh, there are definitely ongoing discussions. How to regulate DeFi more effectively is a big one.
I bet. It's so new, hard to fit into existing boxes.
Exactly. And then there's the environmental impact of some cryptocurrencies. That's a hot topic.
Energy consumption, right?
Yep. And NFTs, how to classify them, how they fit into the regulations.
So they're trying to keep up with the changes, adapt as needed.
Absolutely. This space moves so fast. Now, how does MiCA stack up against what other parts of the world are doing?
Good question. We've talked about India, totally different approach there.
Right. And then you've got the US, where it's much more fragmented.
Like state by state.
Yeah, kind of. And they often just try to apply existing financial laws to crypto, which doesn't always fit well.
So Europe is trying to be more specific, more crypto-focused.
Exactly. And then there's China, which has been much more restrictive, cracking down hard on crypto.
So Europe is somewhere in the middle.
You could say that. They're trying to strike a balance, create a framework that's both clear and encourages innovation.
Seems like they're trying to make Europe a crypto hub.
Definitely positioning themselves that way.
Yeah.
A lot of companies are moving to Europe for that regulatory certainty.
Okay, so regulations are one thing. What about the big financial players, the banks, the institutions? Are they getting into crypto in Europe?
Oh, big time. It's been a real shift. Those institutions that were once super skeptical,
Yeah, they were hesitant, right?
big time. Now they're embracing crypto, can't get enough of it.
Really? Give me some examples.
All right, Deutsche Bank. They're offering their wealthy clients crypto trading now. Bitcoin, Ethereum, the whole shebang.
So they're not just dipping their toes, they're jumping in.
Head first. And Santander, another huge bank, they've rolled out crypto custody and exchange services across Europe.
So people can hold their crypto with their bank now.
Exactly. And this isn't just a couple outliers. It's a trend across the whole European banking sector.
So it's not just talk, they're putting money where their mouth is.
Absolutely. And that institutional money is pouring into crypto markets.
Yeah.
Asset managers are launching tons of crypto-backed products.
Like what? ETFs?
Yep. Bitcoin ETFs are now trading on all the major European stock exchanges.
So even your grandma can invest in Bitcoin through her retirement account now.
Pretty much, yeah. And it's not just funds. Even corporations are getting in on the action.
Really? How so?
They're starting to hold Bitcoin in their treasuries as a hedge against inflation, currency devaluation.
So they're seeing it as a legitimate asset, like gold or something.
Exactly. And the financial markets themselves are integrating crypto. London Stock Exchange is offering Bitcoin futures trading now.
Futures, that's for the more sophisticated investors, right?
Yeah, but it shows that crypto is becoming mainstream, part of the established system.
So even though it's complex, even with MiCA and everything, Europe's crypto scene seems to be booming.
It definitely has momentum. There are still challenges, don't get me wrong. Custody, security, all that stuff.
Makes sense. Now, what about Europe's own digital euro? Where's that at?
It's gone from an idea to a real project, moving fast. Pilot phase started in late 2024, and it's looking good.
What were they testing in the pilot?
The technical stuff, the infrastructure, they wanted to iron out any wrinkles before going big.
So who was involved?
Select banks, some everyday people, all trying it out, giving feedback.
Real-world testing, that's important.
Absolutely. Now, the full launch is planned for early 2026, so it's right around the corner.
People must be excited.
Oh, yeah, lots of buzz about it. But the big question is, how will it work?
What's the tech behind it?
They're going for a hybrid model, a mix of central control and privacy for users.
Privacy is a big concern with these government-backed digital currencies.
Right. But they're using fancy cryptography plus extra privacy features for smaller transactions.
So you can buy coffee with your digital euro and no one needs to know.
Well, in theory, yes. But what about the banks? How will this affect them?
Yeah, that's a big question. They're already dealing with so much change.
Right. But they're adapting. They have to. Investing in new tech, figuring out how to offer services that leverage the digital euro.
So they're not just sitting back and waiting to be disrupted.
No way. They're trying to stay ahead of the curve. This will likely make cross-border transactions within Europe much easier, too.
Okay, so cheaper, faster payments across the Eurozone.
Exactly. But what about private stablecoins? The crypto versions of dollars and euros.
Yeah, will the digital euro compete with them or what?
The ECB, the European Central Bank, has said they see the digital euro as a complement, not a competitor.
So they can coexist.
That's the idea. They each serve slightly different needs, and a healthy ecosystem needs both.
That's an interesting approach. Makes Europe a fascinating case study.
It really does. They're walking this tightrope between embracing the future and maintaining stability.
And the digital euro is a big part of that.
For sure. It's a signal that Europe's serious about being a leader in the digital finance world.
All right, let's circle back to MiCA for a sec. We've talked about the rollout, but are there any hiccups? What's the impact been so far?
Well, like we said, MiCA was a huge step, harmonizing the whole EU crypto scene. But as with anything this big,
There are going to be challenges.
exactly, each country interprets and enforces the rules a little differently. Some are more gung-ho than others.
But the passporting system, that's got to be a big win for businesses.
Oh, huge. If you're a crypto company and you get licensed in one EU country, you can operate across the entire bloc.
So no more dealing with 27 different sets of rules.
Exactly. It lowers barriers, encourages competition, and that's good for everyone.
Has MiCA actually made people more confident about crypto? I mean, that was the goal, right?
It seems to be working. Clear consumer protection rules, market integrity standards, even sustainability disclosures, it all adds up to more trust.
And that trust brings in the big players, the institutions.
Exactly. But it's not perfect. There are still debates, things they need to clarify.
Like what?
DeFi is a big one. How to regulate this rapidly evolving space without stifling innovation.
Yeah, it's hard to keep up.
And NFTs are another tricky area. How do they fit into the existing framework?
So they're working on it, adapting as they go.
Always. This is a marathon, not a sprint. But overall, compared to the U.S., which is still so piecemeal with regulations,
With China, which is super restrictive.
Europe is showing the world what a comprehensive, purpose-built crypto framework can look like.
Okay, last but not least, the Middle East, specifically the GCC countries. What's the story there in 2025?
They're on a mission, let me tell you. They want to be the next global hub for blockchain and digital assets.
Seriously ambitious.
No kidding. And they're putting their money where their mouth is. The UAE, especially Dubai, is leading the charge.
What are they doing specifically?
They've got this dedicated Virtual Asset Regulatory Authority, VARA. Super comprehensive, but also flexible.
So not just a bunch of rigid rules.
No, they want to encourage innovation too. Saudi Arabia is a bit more cautious, but they're coming around.
Okay, how so?
Licensing exchanges, wallet providers, that kind of thing. But they're also very focused on aligning with Islamic finance principles.
Makes sense, given the region.
Bahrain is another one to watch. They've been early adopters, testing the waters.
So different approaches, but all moving in the same direction. What about the other GCC countries? Kuwait, Oman, Qatar.
They're a bit more measured, but still engaged. Kuwait and Oman are balancing innovation with risk mitigation.
Sounds like a sensible approach.
Qatar is being a bit more cautious initially, but they're exploring the possibilities.
So everyone's in the game, just at different speeds.
Exactly. But the cool thing is, they're talking to each other, working towards a more unified approach.
That's smart. A fragmented region wouldn't be as attractive to global players.
They've even got this GCC Crypto Regulatory Forum now for sharing knowledge and coordinating efforts.
Smart move. Now, we talk about Sharia compliance being important in the Middle East. How does that apply to crypto?
It's a big focus. Islamic scholars and fintech experts are working together to make sure crypto products align with Sharia principles.
So there are Sharia-compliant crypto options now.
Oh yeah, investment of funds, trading platforms, the whole shebang. It's opening up the market to a whole new segment of investors.
That's really interesting. Now, what about security and preventing illicit activities?
They're not messing around.
Yeah.
AML, KYC, those are top priorities. They're using advanced blockchain analytics to track transactions.
Sounds pretty high-tech.
Oh yeah, they're serious about it. The UAE even has a blockchain-based KYC system, super efficient.
Wow. So they're using the tech to regulate the tech.
Exactly. And Saudi Arabia has integrated their national digital ID system with crypto exchanges.
So everything is linked, harder to cheat the system.
You got it. But they also want to foster innovation, right? Not just be restrictive.
So how are they doing that?
Regulatory sandboxes are popping up all over the GCC. These are like safe spaces for companies to experiment.
So they can test new ideas without breaking the rules.
Exactly. It's led to some really cool innovations like tokenized sukuk, Islamic financial certificates.
Very niche, but important for that market.
Exactly. And they're using smart contracts for trade finance solutions, things like that.
Tailoring the tech to their specific needs.
That's it.
Hmm.
But they're also thinking bigger, beyond their own borders.
Cross-border collaboration, that's key in this space.
Absolutely. They're exploring a GCC-wide digital identity system, making transactions smoother across the region.
So you could easily do business with someone in, say, Bahrain, even if you're in the UAE.
Exactly. And there's even talk of a GCC-wide stablecoin, potentially backed by a basket of their currencies.
Wow, that would be huge for regional integration.
No kidding. It's all about reducing reliance on external systems, strengthening their own economic ties.
Makes sense. So overall, how would you describe the crypto scene in the GCC?
It's a dynamic, exciting place to be. They're embracing blockchain's potential, but doing it thoughtfully.
With a focus on stability and security, but also innovation.
Exactly. And they're working together, which is crucial. They could be a real model for other regions.
All right, let's move on to adoption. Are people in the Middle East actually using crypto?
Oh yeah, things are changing fast. The region is experiencing a real shift. Digital wealth is on the rise.
Not just oil wealth anymore.
It's diversifying. Crypto ownership is skyrocketing in the UAE, Saudi Arabia, Bahrain, driven by young, tech-savvy folks.
So it's a generational thing, too.
Definitely. But here's the really interesting part. Sovereign wealth funds are getting involved.
Those are the massive government investment funds, right?
Yep, huge pools of capital, and they're starting to invest in crypto.
Why? Are they just chasing returns?
It's more strategic than that. Diversification is a big factor, hedging against the uncertain future of oil.
So they're thinking long-term, preparing for a post-oil world.
Exactly. This isn't just about making a quick buck, it's about transforming their economies.
That's a big deal. This could really change the financial landscape of the Middle East.
It's no doubt. It could create new financial hubs, attract global talent and investment.
What about everyday people? How are they using crypto?
Remittances are a huge use case. Sending money back home is much easier, faster, and cheaper with crypto.
That's got to be life-changing for a lot of migrant workers in the region.
Absolutely. So it's not just about abstract technology, it's having a real impact on people's lives.
We've talked about government-backed digital currencies in India and Europe. What's happening in the Middle East on that front?
The UAE is again leading the way. They launched their AED digital currency, and it's making waves.
Really? So they beat everyone else to the punch?
Pretty much. And it's spurred other GCC countries to speed up their own CBDC projects.
Like a domino effect.
Exactly.
Yeah.
Saudi Arabia is working on a blockchain-based cross-border payment system focused on remittances and trade finance.
Always practical, those Saudis.
Yeah, they're not just messing around with theory. And other GCC countries are using blockchain for things like digital IDs, supply chain tracking.
So it's not just about money, it's about making government services more efficient.
Exactly. But the big talk is about a potential GCC-wide digital currency.
Whoa, now that would be a game changer. Imagine a single digital currency for the whole region.
It could revolutionize their economies, strengthen their ties, reduce reliance on the US dollar or the euro.
But wouldn't that be super complicated to pull off?
Oh, definitely. Issues of sovereignty, technical hurdles, figuring out who controls it, lots of complexities.
But they seem to be serious about exploring it.
They are. The momentum is definitely there.
All right, let's take a step back and compare these three regions. What stands out to you?
It's fascinating how different their approaches are. India has its dedicated regulatory body, very focused.
Europe went for the unified, comprehensive approach with MiCA.
And the Middle East is more diverse, each GCC country doing its own thing at its own pace.
But are there any common threads, any areas where they're thinking about crypto alliance?
Absolutely. AML and KYC are universal priorities. They all want to prevent money laundering and know who's using crypto.
Makes sense. No one wants crypto to become a haven for criminals.
Right. Consumer protection is another shared focus. They want people to be safe, to trust the system.
So even though their methods differ, they have similar goals.
But there are still big differences, especially when it comes to taxation.
Yeah, that's always a thorny issue. How you tax something can really impact how it develops.
Absolutely. Europe's clarity with MiCA has attracted big investors, led to sophisticated financial products.
India's approach has been more cautious, but it's fostering a lot of innovation in blockchain startups.
And the Middle East is creating its own niche, focusing on things like Islamic, finance-compliant crypto.
So different paths, but all leading to a more mature, integrated global crypto market.
That's the big picture, yeah. Each region is contributing in its own way.
India's framework could be a model for other developing countries.
MiCA could set a global standard for regulation. And the Middle East is showing how crypto could be used for economic diversification.
So this patchwork is actually stitching together a more globalized system.
Exactly. And as they harmonize their regulations, things like AML and KYC, it makes cross-border transactions smoother.
So we're slowly moving towards a world where crypto can flow more easily across borders.
That's the vision. But there are still challenges. Tax harmonization is a big one, as is data privacy.
And DeFi, how to regulate this new world of decentralized finance, that's a headache for everyone.
For sure. And then there's the inherent tension between national sovereignty and the borderless nature of crypto.
Yeah, governments want to control things, but crypto doesn't really care about borders.
It's a fundamental tension that we're still figuring out how to navigate.
What about the central bank digital currencies? The digital rupee, digital euro, the GCC's plans. How do they fit into all this?
They add a whole new layer of complexity. Governments are stepping into the digital money game themselves.
Which creates a whole new dynamic between public and private crypto.
Exactly. They want to modernize payment systems, increase financial inclusion.
But will they compete with private crypto, or will they coexist?
That's the million-dollar question. It probably depends on the region, on how things play out.
So another layer of uncertainty, but also potential opportunity.
Absolutely. This is a rapidly evolving space, lots of unknowns, but that's what makes it so exciting.
All right, so we've talked about all these different pieces. What's the key takeaway here? What's the big picture in 2025?
I'd say the global crypto market has reached a new level of maturity. It's not just for techies and speculators anymore.
It's becoming more mainstream, more integrated into the financial system.
Exactly. We're seeing real-world applications like remittances, international trade, even everyday purchases.
And decentralized finance is opening up access to financial services for people who were previously excluded.
Absolutely. But there are still challenges.
Yeah.
Scalability, energy consumption, regulatory hurdles. We've got work to do.
But the progress is undeniable.
Oh yeah, things are moving fast. More energy-efficient blockchains are being developed. Interoperability between different systems is improving.
So it's not just about hype anymore. It's about actually building a better financial future.
That's the goal. And the fact that governments are taking it seriously, trying to figure out how to regulate it, is a sign of that.
We're not in the Wild West anymore.
Not at all. It's becoming more organized, more structured, which is good for everyone in the long run.
So the future of crypto is looking great, but complex.
Exactly. Lots of moving parts, lots of potential pitfalls, but also incredible possibilities.
This is just the beginning, and it's going to be a fascinating ride.
No doubt. 2025 is a pivotal year, but the next few years will be even more transformative.
Thanks for joining us on this deep dive. We'll be back soon to explore more of the evolving world of crypto.
Until next time.